Hi everyone, I am Adis Sheikh and you are watching Tomorrow Events video channel. In this video, we're going to analyze charts of two major stocks in the market. One is Tesla and one is Apple. There is a talk that these stocks might be overbought and they might experience, as you call it, technical correction soon. So let's have a look at the stock and see what the charts are telling us. With your permission, I'm going to share my screen with you and we will take it from there. We'll see how these charts are progressing. So this is, I'm going to put myself on the top over here. All right, so this is Tesla. Let's see what Tesla stock. I have to put on my glasses first. Let's see what Tesla is telling us. So Tesla is doing quite well actually. Let's see where was last low. The last low we see this third Jan, and the low is $104.64, 104.64, and where it is right now. The high is 290, so that's like almost 200% in ascendancy in last 6 months. That's huge. But if we look at the last decline, that is also 20th September, and we are looking at 306, and it fell to 100. So that's like losing almost 70% of its value. That's how it's behaving. Now, if you look at the first wave after in 23, so from January till 15 February, it almost took 100% ascendancy. So this is crazy stuff, really. This is a stock which is going in every direction, 100%, 70%, 50%, and it's quite risky to say the least. All right, and what is happening right now? So the law and it is there are major and minor corrections. So for example, after 16th February, we can see a correction which is up till 13th of March, where it has lost. So the high was 2017. It has lost almost, a lot. It fell to 163. So it's losing and it's gaining. And the last major correction was 27th of April, where the low was 152. From there on in, it has almost ascended again by almost 100%. So almost at 300. So this is how the stock is behaving. So by the evidence that we have from the stock, it would be safe to say that this stock can actually go and correct itself again 50%, 60%, you never know. But when? Now, I am not a big fan of technical indicators, but two indicators that I look to just to confirm my intuition, if you will. So one is Bollinger Bands, and it is, at least bothering Bollinger Bands on the upper side, which would mean that the stock is overbought. And when you see that it's breaching Bollinger Bands on the upper side, it usually corrects downwards. So there is first indication that this is actually at the edge and this stock can correct at any time. If there is a minor correction like this one, so let's see how much was that. So high 276 and the low was 240, not much, but it has experienced a correction just in recent time. That's 21st of January, and that's less than a month back. So if you look at this, you can project it, if say it's halfway there safely, 241 to 250. It can, safely, just a ballpark, it can ascend by another $40 by the way it goes, and it can bother Bollinger Band at any time. So which would mean that you are at a very risky condition if you want to invest. If you're already invested, you can consider, either exiting fully or partially and wait for it to come down, but it can again gain some more value. So it's a tricky decision for you to make. Look at RSI. RSI is in overbought zone, which is over 70. Nothing to be scared of. You can see by the evidence that the a stock can stay in overbought zone for quite a while. But then, unless now it goes back below 70, it won't be in a what do you want to call it, in a bear zone. But by the time it is over 70, you're safe. It can stay over 70 on overbought zone for quite a while. So nothing to worry about. Anyway, but this is a risky stock, just to say the least. The fundamentals are at its side. You have to say that Tesla is one of the best stocks, one of the best companies going out there. But if you look at the evidence of the market and the patterns of the shares and the prices, it's quite risky actually. So take your pick. But if I have to say, I would say that this time around, where it is right now, it is ascended by almost 200% this year. It is due for a major correction. Whenever this correction happens, I don't know. It is in overbought zone, as you can see. It is at the edge of Bollinger Bands. It can go on its merry way. Maybe another $30, $40. I don't know. Maybe less, maybe more. But that's about it. It will correct majorly sometime in a few weeks' time, as it seems from the chart. So this is, as I say, it is not an investment advice. You have to look at your holding. You have to look at your equity value and do your own risk assessment. But as a chart reader, I can tell you this is where it stands. So there is another stock that I have been analyzing for quite some time now, and the stock is Apple. Apple also, same date, it made a low of 124, and right now the high is 193. Not as much as Tesla though, but say you have to say almost 80% or 90%, somewhere around that point, because the ascendancy is, as you can see, is exceptional. But here's the point: you can see one major correction here, one minor correction here, and the stock is actually making, or kind of making, a double top. So next 2-3 days are going to be crucial. If it doesn't break this double top, it would mean, which is 194, which if it goes over 195.50, I would say, then it is in a bullish zone. It is in the bullish zone. If you say the last, hold on, let's look at it. Last high in medium term, the last high was 17 August 23. It has broken this last high. So yeah, it is in a bullish zone, as we say, and it can have a correction, maybe a minor one. But looking at the point from this year, there can be a minor correction. It is at the, not quite like Tesla, but it is at the edge of Bollinger Bands. And if you look at the RSI, it is in neutral zone, not quite above 70. So it is a case where you would say, maybe, I don't know. And if that is the case, if you're invested, you have to be very careful, because on one of these days, these stocks sometimes just turn around and go into the bear zone. So if you think you have made some profits, you want to cash out, you may want to consider that. You still want to hold out, you're here for the long haul, you think you can make more money by holding in, that's your call. But that's how we see these stocks, and the risk is there, but these risks come the rewards, and these are analysis from tomorrow.events. As I said earlier, whatever I've said here and what our views are not anyway the suggestion for trade. It's just for educational purposes. If you want to invest, there is always a risk for equity. You should do your own due diligence. Thank you very much.